Here we are on Wednesday, the 12th of August, 2026, and silver has just fired a warning shot. After dipping to the $64.20 area on Tuesday, XAG/USD has snapped back sharply, breaking above $66 and now setting its sights on $67.17. That is the number every bull is watching, a resistance level that, if cleared, could open the door to a much larger rally. The speed of this recovery tells us something important. There are committed buyers ready to step in on any pullback. When a market bounces off a clear support like 64.20 with this kind of conviction, it suggests the underlying trend remains firmly to the upside. The question now is not if silver wants to go higher, but whether today's inflation data will give it the green light. The recovery did not happen in a vacuum. The US dollar index has been clinging to its gains, hovering near 100, and typically a stronger dollar pressures precious metals. Yet silver shrugged this off. Why? A big part of the answer lies in energy markets. WTI crude hit fresh highs at $83.50 a barrel even as the Strait of Hormuz reopened. That seems counterintuitive, but the market is pricing in lingering supply fears and persistent inflationary pressure. Higher oil feeds directly into higher inflation expectations, and silver is rediscovering its role as a hedge. Then there is the US CPI data due out today. Markets are expecting a softer July inflation print. If realized, that would dial down fears of aggressive Fed tightening, weakening the dollar and giving silver an extra leg up. So the bounce from 64.20 was essentially a bet on a dovish CPI surprise. It is a calculated move, not a random spike. Everything now revolves around the inflation number. If we see a softer core CPI, the dollar could break below that critical 100 level on the index, and silver will almost certainly test 67.17 within hours. A convincing break above there could trigger a wave of momentum buying, pushing prices towards the $70 mark. On the flip side, a sticky or hotter CPI reading would wrong-foot the bulls. The dollar would spike, and silver could quickly retest the $64 support. The market is on a knife edge. Importantly, the long-range forecasts add a fascinating layer. One respected forecast sees silver hitting $79.53 by the end of 2026, a gain of nearly 23% from current levels. But that same forecast then sees a decline to $62.30 by 2030. This suggests that, while the near-term uptrend is powerful, silver may be approaching a cyclical peak sometime in the next 2 to 3 years. For today, though, the CPI data is the only thing that matters. Looking ahead, the path of least resistance seems higher if CPI cooperates. The $67.17 level is pivotal, but it is not the final boss. A sustained break above that would put the 2026 high in the spotlight, and then the massive $79.53 year-end target. Traders should watch for a daily close above 67.17 as confirmation. Failures, however, could see a swift move back to the 64.20 area, and if that breaks, the 40-day moving average near 63.50. It is also worth monitoring oil prices and the Hormuz situation. Any fresh geopolitical flare-up that sends crude higher will likely amplify silver's safe haven bid. In short, the bullish case is strong but entirely conditional on the data-driven narrative holding. So, to bring it all together, on this 12th of August 2026, silver has proven its resilience. The dip to 64.20 was bought aggressively, and the uptrend that bulls were hoping for is back in play. The $79 end-of-year forecast is an ambitious target, but it is supported by the current price action and the expectation of a softer inflation environment. The critical junction is today's CPI release. A benign number could be the spark that sends silver blasting through 67.17. A poor number would not kill the long-term bull case, but it would certainly delay the party. For anyone trading or investing in silver, the message is clear: stay nimble, watch the dollar, and keep a very close eye on that CPI headline. Thank you for watching, and make sure you are subscribed so you do not miss our next real-time market breakdown.